Well, it was the budget that was never planned to happen, and while there have been a number of both new initiatives and previously announced ones, many of them are quite small, and the underlying deficit is roughly what we expected at about 1.5% of GDP. And from 2025-2026, we'll see slightly smaller deficits, but still running at around 1% of GDP. The big theme for this budget was cost of living. We already knew that the electricity rebates were going to be extended by 6 months. The big surprise was the additional tax cuts. After the stage 3 tax cuts last year, we're now going to be seeing the bottom tax bracket move from 16% now to 15% in 2026 and 14% in 2027. And that will make a bit of a difference to many households further out. A lot of the other measures that we see are designed to help at least some households with the cost of living. Cheaper medicines, incentives for more bulk billing, and even the support for the hospitality industry by capping the increase in excise on draft beer. All of this is being funded by a better starting point for revenue. Treasury has revised down their forecast for unemployment, which means that they expect to get higher income tax revenue, all else equal, and pay lower unemployment benefits. And those changes to the starting point have been enough to fund almost all of the initiatives that have been announced. There are also a lot of initiatives that won't actually cost any money in the budget bottom line. Regulatory changes to make things easier for small businesses, extend protection on unfair trading, and also to extend non-compete clause bans to low and middle income workers. Things don't always turn out as planned, and that's why final budget outcomes often differ from what was originally announced on budget night. This time around, outcomes are going to be particularly dependent on how the labour market plays out from here, whether unemployment does stay as low as Treasury are forecasting, and therefore whether tax receipts are as high as they expect. So while there were a few small surprises in the budget, particularly in the out years, by and large it's designed to focus on those core issues of cost of living and the domestic economy. Meanwhile, there are plenty of risks overseas, but Treasury modelling suggests that Australia will be relatively insulated from them.